The BBB connects people with businesses they can trust. Live happily, better after. Always look for the sign of a better business because it's looking out for you. And find a better business anytime at bbb.org.
Good morning, guys. We'll go ahead and get started here in a little bit. But my name is Austin Calabaza. I'm the Community Outreach Liaison for the Better Business Bureau serving New Mexico and Southwest Colorado. Our service area, of course, is the whole state of New Mexico and 10 counties in Southwest Colorado from Durango up to Grand Junction. And then today, for our February webinar, Mastering Financial Management for Business Success, it'll be with Johnny Córdova and Randy Lucero.
Good morning, everyone. My name is Johnny Córdova. I am the business banker for First National 1870.
And I'm Randy Lucero, the Assistant Business Banking Director for First National 1870 and Sunflower Bank.
Yeah, and today we'll just be visiting on Mastering Financial Management for your business success. So look forward to spending the hour with you guys, and any questions that come up, just feel free to write them down and we can answer them all at the end as well. So here's just a brief information about First National 1870 and Sunflower Bank. Our mortgage company operates in 43 states. The bank has $8.1 billion in asset size currently, and we recently headquartered out of Dallas, Texas. All right, so we'll be kicking it off now. And like I mentioned, if there's any questions at the end, feel free to save them for us, and look forward to getting through this presentation with you all.
Great, so financial management for small businesses. So here's our agenda. We're going to talk about the benefits of financial management, budgeting, bookkeeping, and then financial statements, obtaining business financing, and then some key points to remember to allow you guys to take it to the next step. Great. So benefits of financial management. So, by any stretch of that imagination, reaching your goals by making good decisions is, the point of having good financial management. So, knowing what your profitability is, being able to forecast your growth, plan for diversification, have new product lines or even reach new markets, and then preparing for financing, so obtaining loans, lines of credit, and things of that nature. One of the biggest parts of being able to have success in your financial management is being able to budget. So, there's several financial management practices and tools that are commonly used for small businesses. So let's talk a little bit about budgeting. So as far as budgeting goes, we're going to talk a little bit about tracking all your expenses. You have to know what you have out there so that way you can know where you can be successful. Being able to put a plan in place for the future, economize when you need it, and then plan for expansion. And obviously, everyone wants to be able to make a profit, and those are some key points for our budgeting. One of the biggest things for budgeting and having financial management is having good bookkeeping. So it is a critical component of financial management. It helps to organize the process of tracking all income and expenses. And then, the basis for all financial management is to make good business decisions, obtain financing, be able to do taxes, and then, manage owner draws and prepare for your retirement as a business owner. There's some simple steps to bookkeeping. So here's number one, obtain a business accounting software. There's a number of them out there. Open a separate business checking account, so ensure that your business expenses and finances are separate from your personal. Reconcile your checking account, so making sure that what you write out and what's going out is coming out, and what's coming in should be coming in. Track your sales, and then deposit all sales, so that way you get a true picture of what your business is doing. Some more bookkeeping steps here. You're going to write business checks for business expenses. Obtain a separate business credit card, which is key, so that way you can manage the expenses for your business separate from your personal. Always pay your business expenses first. Generate and use your P&L, and then obviously pay yourself with an owner's draw. Financial management software is definitely something that's key. It's easy to organize and complete daily accounting tasks, creates accounting reports such as cash flow statements, helps you to track your financial health of your business, and then you're not going to be using paper to run your business. Use the software to stay on top of it because it's going to be up to date and live for you.
So financial statements, these are the reports that give you a true picture of the financial health and your cash flow. And we'll talk about three basic statements today: the balance sheet, cash flow projection, also your cash flow statement, and profit and loss statement, what Randy mentioned earlier, also known as P&L or your income statement. So on your balance sheet, this gives you a snapshot of the business at a specific point in time. The balance sheet's going to show you your assets on the left, and then your liabilities or debt will be reflected on the right-hand side. The totals on both sides of these will be the same, and assets are going to be what the business owns, liabilities are going to be what you owe to others, and then equity, what's left over for the owner. And the accounting equation that's used is assets equal liabilities plus equity. And you'll notice on this chart that the totals come out to be the balance and are the same. So if you notice ever when you're pulling these reports and those do not reflect the same, normally there's going to be an error somewhere, and that accounting software can usually identify, which is important. So what's a cash flow? What is cash flow? Two primary definitions. The easiest one that I usually go to right away is number 2, is it's moving cash in and out of the business, or the balance of cash received less the amount paid out over a period of time. So cash flow projections, this shows you the company's cash flowing in and out, future cash flows at a specific time. So you might want to know what it looks like in the second quarter of the year, in the third quarter of the year, and with these reports, you're able to identify that. So you can project whether cash receipts will be sufficient to cover any cash disbursement. So are you bringing in enough money to cover any debt or any payments that you need to send out? So how can cash flow projections help, and why do you need one? Well, it tracks your liquidity when accrual accounting mass cash realities. It helps you determine the need for financing. And as lenders, it'll show your ability to plan and repay financing. So gives us the ability to identify if the business has seasonal income coming in or what your income looks out throughout the entire year. So this we created is just a cash flow projection sample, breaks down sources of cash, operating and non-operating uses of cash. So we had a spreadsheet. We didn't put the report in here to do the I guess it's the numbers beforehand, but ways that you can help on increasing cash flow, we listed the important things. One way is to do it is increase the number of items you've sold, increasing the price. So maybe reviewing if you have something similar in other markets and your price might be too low. Of course, you want to reduce expenses, and then changing the timing of your expenses. So maybe you don't get a discount for paying 2 weeks early. You want to hold on to that cash until the date of the bill or the date that you need to pay for your inventory. And then save money to have sufficient opening cash to get through the startup period as well if you're a startup company. Other ways is obtaining sources of cash other than sales. So things like a line of credit, utilizing your credit card to cover any inventory or bills. Reduce the timing of your owner draws. So if there's 1 month that's slower, you want to take less than a month where you're making a higher revenue. And then buy inventory from a vendor at a lower price. So if you can use your line of credit to get you a discount on purchasing inventory earlier, that's a great reason to have that line of credit in place. Obtaining credit from a vendor. So if you don't have a line of credit, or if you have it, you can use this coincidentally with your line of credit, is have the vendor give you terms on what you can obtain from them. And establish a policy to get paid sooner by customers. So that could be giving them a 5% discount if they pay 2 weeks early for anything that they're purchasing from you. So your profit and loss statement. This one's going to track your profitability, and it's going to show whether the business is making a profit on what it's selling, and it'll measure the revenues and expenses over a period of time. So this can be checked quarterly, semi-annually, annually, or monthly if you want to look at it for the month as well. So what does this profit and loss statement show? Well, it shows how successful the buying and selling process has been managed, and it's also measuring the ability of your business to grow, repay debt, and support you. So are you bringing in enough funds to cover all your bills, loans, credit cards? This will give you a good idea. And the P&L is the most important report that you'll get off of your accounting software. So we put together a basic formula on here for profit and loss statement, and we'll talk about the net profit. So what the net profit pays for, it could be your owner draws. You're looking at future expansion and equipment. If you have additional, you'll be able to do principal loan repayments, and also prepares you for your income taxes. So how do you compile the profit and loss? Like we mentioned, it's really easy, just having that accounting software, plugging in your numbers, it'll produce this report for you.
This me?
Yeah.
Right. So business financing. What is business financing? Financing is getting the money you need to start, operate, or grow your business. Basic financing concepts are equity financing versus debt financing, or financing working capital versus financing fixed assets. What are the do's and don'ts for small business financing? One, invest your own money. Earn the right to borrow. You're going to show profitability. You're going to understand and keep working capital. Be lean on your fixed assets, and then match sources and uses of your funds. And then again, more understanding your financial statements so you could tell the story of your business. Understanding the collateral options, so what types of collateral the lender is looking to take on for your financing. Understanding the risks and costs of the types of loans, because there's a number of different loans out there with a number of different terms. No grants. Shop around, figure out what product works best for you, and then get an expert's advice. So SBA or your bank would be able to give you some more expert advice when it comes to the different options when it has business financing. So loans, steps for getting ready for a loan. Have a business plan, including your profit plan. So know where you're going, being able to project those cash flows and things like that is going to be very important. Know what you can afford. Study your financial statements. Make sure to check your credit report, and then establish what collateral options you're willing to provide. Show your equity contribution, and then research your financing options again. Find the best place for you to be able to take the financing that you're looking for. The loan package, these are common elements of a loan package, and a loan package is what the lender will collect from you as a business owner to see what potential business financing you can get provided. One is a business plan showing where you are and where you're going. Business financial statements, so current and historical, that helps the lender to be able to give a track record of your propensity to repay. Personal financial statements, giving the financial picture of you as an individual, as the guarantor. And then personal and business tax returns, which again will validate all of the things that you're putting in your business plan and your financial statements. What are the elements of that loan package? Again, is we're going to look at sources and the amount of equity contribution, credit reports for you as the individual, what our collateral would look like, and then purchase agreement and appraisal, contracts and estimates for different things if you're purchasing a building or, doing some renovations. So qualifying for a loan. What are the criteria for qualifying for a loan? One, always good credit. Equity contribution, so where the portion that you as the owner are going to be putting towards that particular purchase. Ability to repay is something that the bank looks at on a very, very stringent scale. And then loan to value ratio, making sure that you're in a good collateral position. So again, as you're looking for loan opportunities, you're going to be able to have a collateral that is worth what you need to borrow. So startup financing. What are the financing options for startup businesses? So one is equity. So if you have a property, you can take equity, business equity, SBA allows that as well. Sweat equity, business credit card, or a family member. Looking for a loan. So what should you do when you're looking for a loan? You're going to look at bank or regional lending organizations, which we have a number of different ones here in New Mexico and through Southern California. So key points to remember. Financing is getting the money you need to start, operate, or grow your business. So those are three different time aspects of your business that you'll be looking for that capital. But it's as always, you start with a budget, making sure you can understand your financial position. And then sound bookkeeping is the basis for all financial management. Purchase and learn how to use a financial management software. There's a number of them out there. The one that always comes to everybody's mind is QuickBooks, but there's a number of different softwares out there, and some of them are industry related. So shop around.
Yeah, I think one of a great thing to do is if you have your CPA, take some time for them to explain some of the stuff on your financial statements, right? How the banks might be looking at a profit and loss statement, what they're looking at on the balance sheet. And also it's good for you as a business owner to understand all these, because you want to go in and be confident when you're talking to your bank or your banker and letting them know what you're looking to do. And you don't want to be caught off guard a lot of times on questions. Likely we're not always, as a business owner, you don't have a lot of time to spend reviewing this all day, right? You have a business to manage, but it's good to have an idea of what it looks like on your books for those times when you need financing for whether equipment, building, lines of credit.
So the three statements again that Johnny had covered was your balance sheet, your cash flow statements, and profit and loss statements provide a compelling story that describes your business. Separate your business and personal records and funds. And then factors that affect your ability to get a loan are your credit score, your equity contribution, repayment ability, and then loan to value ratio. Great. And now again, we're going to be able to take any questions, and hopefully we have some great answers for you.
I have a question.
Yes, Yoli?
How does sweat equity, how does a bank handle sweat equity when it comes to obtaining a loan?
That's a great question. When it comes to sweat equity, it's hard to put an exact value on that piece, right? So the financing product that usually allows for financing of sweat equity is going to be your SBA. And that's where we'd be able to get some sort of valuation of a company in regards to, what additionally is there beyond just the assets, right? And there would be a number there. It's based on a couple of different things, but usually it's going to be in the realm of, what your client book looks like, what that potentially generates on an annual basis. But the way that that's valued is usually through some sort of business valuation that allows us to put at least some sort of tangible number on it, even though that's not collateral.
Okay.
Yeah, so like Randy's mentioned, usually like when you're looking for that sweat equity injection, the banks will hire a third-party valuation company, and they'll look at your financials. So like we mentioned earlier, it's really important to have that profit and loss statement. You got to have your separate entity for your business and with your taxes, and they compile all those reports, and it's able to present a picture of where the business is, and then also if you're expanding, right, what that would look like on their end when they're completing that valuation, on how many new clients you're going to gain, or what your book revenue is going to grow by.
Okay, perfect. And one other quick question. How does well, I started the company about a year and a half ago, and we tried to go through the SBA process, the loan, and it didn't work out. And so that was a startup business. So, there was a lot of information they wanted, like historical data, which we didn't have, of course, because we were a startup. Uh, and that was it was very defeating, I guess I want to say, because this was a startup business. I thought the SBA was there to help startup businesses, but from my understanding, just because we didn't have like a lot of historical information, which again we shouldn't have had, but like I've been in the business for 30 years, and so I was able to provide pretty accurate estimates. Um, and actually now 2 years, a year and a half later, we were really really close to everything that I had projected. But anyway, like when's a good time to try to get the SBA to help you? Because obviously it's not in the beginning. So what would you all recommend?
Yeah, so I'll take the first part, and then I'll let Johnny, jump in. The SBA is definitely a great vehicle for somebody who, there are some startup products, but it's when it comes to that particular thing as a startup, usually looking at some of the community foundations and lenders and finance companies is the best way to go. But in looking at just traditional loans, usually you want to have at least a 2-year history. SBA will allow right under the 2 years. And as mentioned in the presentation, a lot of it is going to be based on historical data, and the ability to repay, or the ability to repay based on what your current business operation is, because all lenders are risk-based lenders, and at the end of the day, collateral is important, but the propensity to repay and ensure that repayment is coming is what a bank looks for, even the SBA. The SBA is a great tool when it helps with acquiring an existing business. And additionally, it's a great tool for expansion, but it helps more along the lines of a collateral shortfall versus, a traditional lender will not take a collateral shortfall, where the SBA will take the collateral shortfall, but use that sweat equity, or, what we call just basically the business's wherewithal to be able to identify an opportunity to lend this to a particular company.
And when you
Yeah, and
say traditional lender, do you mean just like bank loans, or
Correct. So a traditional, or we'd say traditional, or just a conventional loan program is usually what a bank would provide, because we do have federal regulations that need to be followed in regards to what we can lend, how we can lend, and everyone needs to have the same exact criteria. So they have some very strict guidelines in what that looks like. As far as the SBA, that is a different program that the banks utilize, but we go by their guidelines versus our own, or what the federal government provides for us. So
okay.
yeah, traditional financing is bank, and then anything else, I don't want to say is non-traditional, but they have different terms because they're not regulated like a bank is.
And to go on kind of off of what Randy's talking about, I think you're in a great position right now at the year and a half. One of the things I would recommend is, if you haven't already done so, is you get yourself established with a business credit card. And that starts to show your lending ability and repayment on that line. And then at that 2-year mark, you're going to have that time period of where we discussed on the conventional lending, where we can review the last 2 years. And then also we can look at maybe your second quarter financials and see how the business is currently operating at that time period. And it gives us an idea of where it's trending, right? You already talked about how it trended, where you saw it going. But now that you hit that 2-year mark, you'll be able to do that conventional lending where you can go sit with your bank. And banks can talk to you about, like in our bank, right, we can do conventional and we do SBA. So we're versatile, where we can have a conversation on what's going to benefit you most. One might ask for less equity injection into the company to do the loan, while the conventional side might take a little bit more.
Okay. And I think there's a Sunflower Bank in Las Cruces, right?
There is.
Okay.
And if you need a contact, I know they're going to share our contact information. Reach out to one of us, and I have a great banker that works in our Las Cruces area that would be able to help you out.
Okay. Thank you.
Absolutely.
Let's see. We also had some questions come in. Let's see. Are there any accounting softwares that you would recommend besides QuickBooks?
It's hard to say, but like I mentioned, if you have a particular industry, Johnny mentioned, talk to your accountant on what maybe accounting software they would like you to use, because certain accountants like certain ones. Additionally, again, per industry, I know that there's some very specifics to restaurants. There's some to general contractors. It really just depends. But there's a number of great ones out there. It's hard to say, depending on, it's more based on industry, I would say. But if you're looking for a general and cost-effective option, QuickBooks is usually the way to go, because they are very general, and then you can a la carte add specific things. Other accounting softwares might get a little expensive, but that's why I say it is 100% geared towards what industry you're in and what you're looking to get out of it.
All right. And the next question we had was, how should I structure my business finances to separate personal and business expenses properly?
Yeah, so one of the main things I would recommend is creating an LLC, and I think that just is where you can separate your two, right? Your LLC is going to be the entity that you establish with your bank, and you run all your business finances through that. And if you need to pay yourself and put money into your personal account, right, while using that business structure, you're able to either do ACH as an electronic payment or write checks, and that keeps track of where those funds are going. But what that really does is it separates where you're not maybe confusing your CPA or confusing yourself on, like, why did I take out $500 this month? and maybe it was for personal use rather than for the business side. So I think setting up an LLC, establishing that accounting software, like we mentioned, the QuickBooks is just something that you can do a la carte, but I always recommend talk to your CPA, because depending on the industry, they're going to have the recommendations on what works best for your line of business, on what program to use.
So, and as mentioned in the presentation, the best way to structure it is you have a separate account for your business and a separate account for your personal expenses, and you do not mingle the two. That's where it does get muddy for anyone. So ensuring that any business expense goes through your business account or business credit card, which is a great way to track those expenses. And then all sales, everything from your business goes into that account. And then all of your personal stuff is separate. So again, if you pay yourself, you do not just go and take money out, you take an owner's draw, you categorize it. So that way, again, your accountant, your accounting software can ensure that those two things are separate. If you're looking for financing and you have those things muddied together, it's harder for a bank to understand what your propensity to repay is, because we want to know that the business can make those payments, not just you and all the additional maybe mortgage and things like that that you have to pay. You want to make sure those two things are separated out.
So, well, if there's no more questions, I do have their contact information up for Johnny and Randy. Feel free to reach out to them directly, email wise.
Absolutely. And, we'd love any questions. Do not hesitate to reach out. We always love to have a conversation, to be able to help guide any of our small businesses in the community. That's what we're here for. And we have the resources. So we'd love to be able to help anyone who needs some assistance.
Yeah, thank you guys. We appreciate it. And like Randy mentioned, we're a resource for you guys. So if you just have business questions, feel free to reach out, and we're glad to assist and make recommendations.
Awesome. Well, thank you guys so much. And then I'll send this out to you guys for you guys to rewatch at your convenience. Whoops. I believe we had. Oh, perfect. Someone was just saying it was excellent.
Yes, thank you for everything.
Awesome. Thank you. Well, have a great rest of your guys' day, and we'll see you next time.
The BBB connects people with businesses they can trust. Live happily, better after. Always look for the sign of a better business, because it's looking out for you. And find a better business anytime at bbb.org.